All right, good morning, everybody. Happy Monday. It is the first day of August, and I am running just a few minutes late, so I want to just jump right into things here. First thing I want to do is go back to Friday just to kind of toot our horns here and take a look at what happened. The low of the day on Friday morning, remember we came down into this in our trading session, was 40.81, our major eye level to the tick. Unbelievable to me. And then from there, we bounced off 40.81. We came up to our minor eye level, 41.23. And yeah, it broke it by 2 or 3 ticks there at the most. Hit it, pulled back, held the 200, then came right back and hit it to the tick and failed. In fact, just a little bit before there, we did come up right into our minor eye level at 07.5, pulled back, and then came up through it. And then when we pulled back from there, came right into 07.5 and got our bounce. And I'll just draw it out here. Came down, actually, let me start over. In the overnight session, we held 07.5, came down, we did push right through that 94 quarter. This 94 quarter, I just added to the chart. So if you have your major and minor eye levels on the charts, go ahead and add 94 quarter for the last day or two before today. It's been looking like a pretty relevant little area of support and resistance. And you can see this was all from Friday here. So we failed from 07.5, and disregard 94 quarter because I added that this morning, but we came down right to 81. Then we came up to our minor eye level and pulled back, bounced right off the OPL there and got a little bit of consolidation in here. Came up through 07.5, and then we pulled back and bounced right 07.5 again, and then came right into 41.23. Again, broke it by 2 or 3 ticks, pulled back right to the 200 moving average, came right back to 23 and failed to the tick, came down, and then we started chopping back and forth between 07.5, our minor level, and our power level there, the holy orange power level, until it eventually failed and came right. Well, this 94 quarter I did add this morning, so kind of disregard that. But then we came up, and I'm going to have to scroll over here. We kind of chopped around. We held 07.5 again on this pullback, only to launch back up. And then we came up, and the high of the day was literally right into our major level at 41.42 here. They did hit it, pull back, but then of course, again, I say this all the time, they had to go ahead and push through by 2 points and then fail at the end of the day. So if we zoom out and look, the low of the day was 40.81, our major eye level that we talked about in our trading session, pushing into it there. And then we came up, we held the minor level, we pulled back, we held the minor level. Well, actually, this one I just added. And then we came up, and the high of the day again was right at our next major level. Like, you could literally just trade all these major and minor levels to and fro. I'm telling you, it's just unbelievable stuff. Now, coming into this morning, we did fail again at 41.44. So we pushed 2 points through the major eye level, which again is really not much of a push through, considering it's a major level that you can see out there on the 4-hour, the daily, the 60-minute chart. And now we've pulled back a little bit, and we're now coming down, breaking through 07.5 again. So it's just unbelievable to me. Almost every day we come in, and the low of the day, the high of the day, and all the major rotations throughout the day are right off of our levels. So that's where we are this morning. We did come down in the overnight session, bounce right off 07.5, and then they turned and they didn't have enough steam to continue pushing, and now we're coming down again and finding some resistance here off this 07.5 area in the chart. All right, so let's jump up. I want to do a very quick run through of the high time frame since I did start a little bit later this morning, and then I want to talk about again all of the levels that we're going to want to be aware of coming into the open here. So let's jump up. I mean, the yearly, obviously we have had a really great recovery here over the last few weeks. But again, I don't be surprised that after such a strong bullish push, we're going to go ahead and start peaking down to lower levels in the market that we haven't seen for a year or two now. On the 3-month, I just want to come onto this time frame just to point out all the way back when we bounced off 36.39, we've had a 3-month or a quarterly bullish divergence. When we go down to our monthly, We also had a monthly bullish divergence from down there. And when you go down to the weekly, we also had a weekly bullish divergence down there. And remember that, and actually if you go to the daily also had that signal as well. So when we came into the market, not on June 17th, but on June 18th, I told you specifically, we've got every single time frame on the high time frames giving us a bullish signal. That means we very well could be trying to break out to the upside. And ever since then, we pushed up. They took a lot of time here. It took a lot of strength to eventually finally come out. And now we're all the way up, almost at the highs of June. In fact, actually, that's the last day of May. So May going into June 1st, we almost are back up to those highs. Now, do I think that we're going to come all the way back up and break through the all-time high and start chugging to new all-time highs here? It doesn't seem probable, but there's always a possibility that that could happen. And again, remember the confluence from the low of the year is on every single time frame. Basically, the only time frame, you can't see it, is on the yearly chart, which is just way too zoomed out to see any type of resolution down off the lows. But every other time frame, 3-month, monthly, weekly, daily, 4-hour, every other time frame, all aligned from that low. So this bounce was the expectation. Of course, we were very skeptical of this bounce getting anywhere due to what's going on in the world right now. So with all of that being said, let's take a look now at our daily chart. Yesterday, or I should say Friday of last week, we came up, and remember we've been watching this potential bearish divergence off these highs. As the market continues to push to these higher highs, we're getting higher RVI levels. However, if we go back again to the highs of the end of May, the highs of June, the RVI was lower. So we've got a divergence between what RVI is saying and what price is saying. And as this continues to push, we have to basically point out that we have it still. So from Friday's high, we've got a bearish divergence on the daily compared to the major highs from last month and the month before that. And that's all I want to mention here. Remember, it's not necessarily my favorite setup. I like that first setup back at the end of July that led to a nice 250 point pullback there. Or actually, I take that back, just about 125 point pullback. But it didn't get much more than that, and then the bulls jumped back in. This one I'm not as big a fan of, but it's there. So we've got it. Let's go down the 4-hour as well. At least has a little bit more of a, again, not necessarily my favorite formation, but it is a bearish divergence from Friday's high. And then in the overnight session, when we pulled back, we did get a 4-hour signal that led to a little bit of a breakout to the upside, but they didn't, well, a bounce to the upside, but never broke out through the highs. And then the bears jumped back in, and we've broken down below that 4-hour signal. So it's no longer really in play, unless this is just a little duck and we're going to rip. But we can't really go much further. I mean, we've broken it by almost 10 points. So I think it's fair to say that that's done with. So even though we have that signal there, it's not something that's in play anymore, because it did bounce 4109, 4133, so whatever. Get about 20 points, and then it turned. So on the 4-hour, the main thing that I'm just pointing out here is that we do have the bearish divergence from the high of Friday that's in alignment with what we're seeing here on the daily. And then if you jump down to the hourly, we also have an hourly off of that high as well. So a pullback this morning is the expectation, and sure enough, in the overnight session, in our Sunday Globex session, they have basically just pulled back. There was an attempt to bounce here, and basically around midnight, and so they took it up just a little bit, but couldn't really quite get very far. Came right into the close of Friday, and now we're failing lower. So this pullback is expected, especially when you have daily, 4-hour, and hourly bearish signals. So we'll see again, how far can the market pull back here with all of this kind of bullish cooperation going on for the last few days, last few weeks? Who knows? So let's do our levels here for this morning. Remember that pretty much every relevant level on the pullback could act like a support On Friday, it happened to be our major eye level, 4081 to the tick. Came right to 4081, bounced up again, right to 4142 and pulled back. So this morning, as we pull back, each of these levels could potentially be just like what happened here on Friday. We've got the smaller leg retracements that are these kind of dashed dotted lines on the chart. And then we have the higher time frame or the larger leg retracements here with the lighter blue dashed dot lines. Right, so we've got those, and I guess I'll just mention them and then we'll talk about everything else. So we've got the leg from, and if we zoom out just so you can see it visually, pull back here. We've got this leg up, remember, back from 39.13, just 3 points below our major level, all the way up to this high here at 40.42, our next minor level. And then we got this really nice pullback, and then this new leg up, which brought us, remember on Friday, it brought us up to right about, I think, there. But Friday obviously got more bullish push, so we now have to consider the whole push up from the lows of July 28th to the high of Friday there. So we have the two minor legs that, and then we also have the entire leg. So from 39.13 quarter all the way up to 41.42. So hopefully that you're not getting too confused here. We've got leg one, pullback, leg two. And what I want to look at here is the entire leg, the whole thing, and then the smaller leg right here from the low of, what was that, Thursday, up to the high we made on Friday. So the two retracements, we've got, bam, whoops, wrong button. We've got this one right here, which gives us just about 40.86 half, 40.67, 40.69 or 40.68.75, and 40.51 quarter. Those are the three kind of the small leg retracements, and then we have the whole push up from the 39.13 quarter all the way up to that 41.44 high of Friday, and that gives us 40.55.75 or 40.56, 40.28.50, and 4,001 quarter or 4,001 half. All right, so those are the major retracements I'm looking at on the pullback here. We have all of our major and minor eye levels, which you guys know, day in, day out, act as very good large structure zones, support and resistance zones. And then there's just a couple swings that I went ahead and marked on here. We've got this swing that we have not come back into right here at 40.58. The swing back here is basically our eye level, 40.42 to 40.44. Remember that major resistance we talked about for a few weeks? Then we came into it and failed on, I think, Wednesday of last week. And what else? I'm not going to list every major and minor eye levels because you should already have those on your chart. But we have the, I'm sorry, I went off track there. We have the swing high there, 40.58. And then we have this swing high, 40.42 to 44. And then we have this swing, which was where we got that major rejection back on July 22nd up there at a basically 40.16. So it's 40.16, give or take a few ticks right there. And then a little bit lower, that 4,006, 4,575, which was, if we go back to, it's a major structure zone back from the beginning of June there that we came into. And remember, we tagged each of these levels right to 06, pulled back, right to 16, pulled back. So those two levels are still there as potential supports as the market comes back into those areas. And I think that's it. So the only things I added to the chart that are different from Friday or from last week are, well, I had that swing on there, are basically the two fib legs, the small leg and the entire leg, and maybe one or two swing highs. And then I did, again, for anyone who just came in, that minor level 40.94 quarter I just added in. So on the pullback here this morning, remember, this is basically kind of the summary of what I said. We've got a major confluence of bearish signals from the high of Friday. That would tell us there's an expectation for a pullback. Is it going to turn into a 2, 3, 4, 500 point sell-off? It could. But all we can really interpret from that is there should be a pullback, and then you never know if there's going to be support at each level below us here. So the expectation this morning is for a pullback until we start to find some support that at these expected levels. If we end up breaking through, and just want to zoom out and look, this major swing high from here, that's 40.42 to 44 level, we came up into it, we failed. They tried to push through it here on the 28th and got a failure just out of the open, and then broke through. That area to me is really sticking out. So if we continue to pull back, I know each level could potentially hold, but this one really sticks out to me. So we'll see what happens down there. And if the market does just start to rip higher, whether it's from the low of the overnight session here right now, or if it's a little bit deeper and then they bounce, if they get through the high of Friday, everything above us we've already talked about. We've got the major retracement level up here at 42.21. Okay, 42.21 quarter. Basically 42.21 with a point or two on either side of it, because that is the major fib from the all-time high. And I can't zoom. Oh yeah, I can. On the 60-minute, all the way back from the all-time high at the beginning of the year, all the way down to the low of the year. We've got that fib retracement there at 41.22. Or I'm sorry, 42.20. Any further from there, and it's again just each major and minor level. These are all those structure pockets where you typically see areas of consolidation and areas of really strong support and resistance. Okay, so that basically wraps it up for the beginning of the week here. Keep in mind we've got news out of the open 15 minutes after the open and 30 minutes after the open. So there's always a possibility that when that news drops, the order book can get a little bit wonky. So if you're in a trade, you want to be aware of that time. Or if you're about to enter a trade, it's very important to be aware of. So I'm going to put the times here. We've got 6:45 Pacific. There's going to be a news drop. Again, I don't even care what the news is, guys. I just want to know when it happens. So we've got 6:45 on there, and then maybe I should lock that in place. Okay, I did. And then I'll copy that to my 3-minute chart. And then we've got 7 a.m. So let's see if I can get over here. 7 a.m. Lock it in place. 7 a.m. We'll get that up on the 3-minute. And that's basically it, guys. We'll see what we can get here. Have a great day, and we'll be back tomorrow as usual.